means to my friends, my community. Like every payment makes a positive change. Support a small business. Make a big impact.
A very huge thank you to Aldo for setting the tone and preparing us for what we hope will be a robust conversation. I think if I were to steal a term from your presentation, it certainly would be mind-blowing. But I want to stick to your thoughts around the future of banking. But before I do that, we're joined in this panel discussion by Dylan Piatti, who is the Managing Director for Africa at Advantage Group International, as well as Johan Maria, the CEO for F&B Retail and Commercial for the rest of Africa at First National Bank. Now, Aldo, I want to bring this back to you. And as we're talking about, the future of banking and interoperability, an earlier discussion that we touched on was really looking at the innovations that are coming through and how banks but also how other financial service providers are really lending to giving this customized banking experience. We now have, innovations like cryptocurrencies, as well as the immutability of the blockchain experience coming through. In your engagement with these layers that are being added to our banking experience, is it added more complexity or is it adding more ease? And to particularly these three stakeholders, the lender, the facilitator, as well as myself as the consumer?
That's a big question and a great one, because I think that's what many of us grapple with every day. It definitely does bring complexity, to be honest. And the complexity goes into multiple layers when you look at crypto as an example, because whether you're talking the asset class of crypto, be it Bitcoin or Ethereum or those coins, or even the new non-fungible tokens, which helps you buy an expensive painting, that's one side of it, and it's an asset class based crypto currency or crypto capability as we look at it, Visa. And those aren't too easy to transact with. That's not the 65,000 transactions per second environment, but it's a very important environment as a value store. Let's call it the crypto gold. So let's say Bitcoin is like you would hold gold, a gold coin, etc. today. It's not what you use to transact at the till. Then you've got the other side, which is evolving very quickly, which is around stable coins and also the what's called CBDC or let me just get the point right here. So it's the formal currency from a regulator. So it would be the central bank's currency, and that's usually linked to an actual currency, a fiat based. We will call it fiat based currency. So like ZAR or Kenyan shilling or Nigerian naira or US dollar. And it's linked to that, so it's much closer to let's call it a digital value store that we would be used to from a virtual card or wallet perspective today. That the big difference here is it sits on the blockchain. It's visible depending on whether it's private or open ledger, and that's where, as I speak, you can hear the complexities creeping in, right? Whether it's private, whether it's open blockchain. Whether it's linked to a stable coin, which is issued by a specific provider, like we see USDC is issued by Coinbase in the US, or is it a central bank coin like it's issued in China by the Central Bank of China? Does it have one or two layers? In other words, is it capable of having a value that's backed by the central bank and then be extended by credit in the back? As I speak, you can hear how the complexity just increases. So what's our job as lenders, facilitators, to make it easy for you as the consumer, if we put it in that way? I think the first thing is it's important to make sure that we translate between transacting and asset class crypto capabilities. I think that's the first piece. Second piece is to make sure that we simplify that access. And that's exactly what we've started doing at Visa with about 35 cryptocurrency and exchanges from the beginning of the year. And it's evolving very, very quickly. So it's giving that access to, let's say, the stablecoin environment so that you can translate stablecoin into currency, fiat currency you can transact with, make it predictable, and make it broadly accepted. So the moment it hops onto an interoperable space or ecosystem like Visa, wherever you see a Visa sign, you should be able to use this transaction. And that makes it extremely open and scalable. I think that those two levers is what we need to do from a, let's call it, lender banking perspective, as well as a facilitator like Visa. And that means that for a consumer, you have broader choice, you have much simplified access to that complexity, and then you've got transparency. You can actually act, and you can make some more predictable and more informed choices around how you want to use it. Do you want to just use it for a quick payment and buy a coffee at Starbucks, or do you want to invest that for a longer term? So that's how I would frame it for now. And yes, there is complexity, but our job is to make it simplified.
Absolutely. And I think an informed user is definitely an empowered one, and who will know how to use their transactions and how to use their banking experience and make it much more powerful and efficient. I'm going to cross over to Dylan and bring you into this conversation. And looking at 2 points that Aldo had mentioned in his opening remarks, and that is looking at the concept of open innovation, which brings in open data, open APIs. But what this also invites is touching on this point of, particularly in Africa, that cash is still king. And one of the many reasons why technology and using or being a part of the digital economy is so intimidating to many Africans is the component of trust. Right? And how this impacts how you are able to essentially engage and bring forth this future of digital banking. As we call to this future of a digital Africa, how does trust bake into this conversation?
Yeah, I mean, it's such a critical question, and it's also such a broad question. When we talk about trust, we've got to look at it at a number of different layers, because we've got those who are already banked, and then we've got those who are unbanked and or just coming on. And so what we're talking about in the opportunity for the digitalization of Africa, so digital economy, the drive of the digital economy in Africa is the migration from cash transactions to digital transactions. So those who, let's call it unbanked to banked in whatever form that might be. But what that means is overcoming a legacy of fear when it comes to digital and this digital environment. Let me take it back a step. What are we really seeing in this digital transformation? Because we're talking about banking, and Aldo, I know you mentioned trust about comfort and who do you trust as a partner, and you've got a banking partner can offer this because of the infrastructure and the legacy that's there. Absolutely. However, this digital transformation within not only South Africa but the rest of the economy is seeing a changing relation dynamic happening between suppliers, distributors, merchants, retailers, and the consumer. So we're starting to see what we call this convergence. We're seeing it already. We're all experiencing this in different ways, yet we kind of bucket them in silos and we won't bring it together. So banks becoming retailers, retailers becoming banks, telcos becoming retailers and money lenders, the play of how fintech becomes part of that. And then what happens then in this government to consumer and government to business concept? There's this massive convergence of this ecosystem. And what that does is create greater risk in terms of the trust factor, because now multiple players have an influence to the extent to which we are promoting an accelerated trusted engagement in digital environments. So it's not just the bank, because we know the bank is also, as an example, and until something happens, until there's a massive data breach, and trust is lost, we don't know, what the next level is. So how do we kind of improve this trust? There's a program that I was part of, and E-commerce Forum Africa has been running around promoting standardization in e-commerce transactions around the continent, because as was also mentioned by Aldo, standardization is a big challenge. So how do we promote cross-border standardization in terms of expectations for consumers, either existing or potential consumers, when it comes to online transactions? And that's not just in the banking environment, because if a consumer doesn't go, okay, I'm talking about a bank, I just want to do a transaction. However, that's facilitated in the back end with all these smart systems is not what I'm worried about. I'm worried about the interface and that experience. So I think we need to look at standardization. We need to have some kind of transcontinental collaborative private and public sector body that looks at the concept of a single window and looks at standardization in terms of cross-border management of transactions and then how that filters down to sovereign states. We need to look at how we understand that policy lags behind innovation. So we talked about the regulatory framework in one of those trends and how important that is for the future of the digitization and digital banking and digital infrastructure in Africa. The regulatory framework is important, but we're seeing innovation driving that ahead. So how do we flip that on its head and say, hey, this is going to be private sector led? How do we have a more collaborative program that is led, in fact, by the private sector, not led as much by the government sector? So how do we switch that paradigm? I think is going to be a big issue. And then what does this lead to? So there's a couple of notes I said to myself, what is trust leading to? We're actually talking about, as we said, inclusive development. We're talking about financial inclusion. And as such, we're talking about digital identity and the digital consumer. And from there, we're moving into the concept of data sovereignty. So trust is also about who am I in a digital world? Who owns my data? How is it accessed? And how do I use that going forward? And I think this is going to be such an interesting journey over the next few years as we see this evolve. Who the winners are going to be and the leaders on the continent are going to be interesting. We're seeing movements in Morocco. We're seeing movements in Ethiopia. We know South Africa is really, more advanced than the rest of the continent, but we've got some legacy systems that are also creating impediments. And how is this going to change in terms of who's winning the fastest over the next couple of years?
Dylan, I suppose as a follow-up question to that, particularly in your opening remarks around the banked and the unbanked, right? Because we understand financial inclusion very differently. But as we're talking about this digital future, what exactly are we prioritizing when we're talking about financial inclusion? Because when someone is necessarily unbanked, it doesn't mean that they are not financially, a part of this digital inclusion. Because we have a lot of players, a lot of fintech players and startups to that point that are coming into the digital economy and saying you don't necessarily need to open a bank account, but you can also still transact and be a part of this. So what are we prioritizing? Do we want to create this balance between the banked and the unbanked, or is there a particular sort of segment that we want to zoom in?
But that's a critical question. It all depends on which window you're looking at this from. So here we've got F&B and Visa. The most critical components of this concept of digital infrastructure and digital banking of the future. However, what you just said is this concept of digital transactions is not dependent always on a bank being in existence. So then what does that mean going forward? How is that going to change in terms of the concept of what the future of banking might look like if we're starting to look at financial inclusion? And to your question, what is most important depends on where you're looking at it from. If you're looking at it from economic growth and development from a regional continental level, then that is incredibly important, because the more we can get, I suppose, onto a digital, let's call it banking system or digital system, where we have line of sight, for lack of a better word, which itself is dangerous in terms of who is doing what and how we're able to manage that data, and data being the new oil, to enhance those that are now being included, but to uplift them within the economy is absolutely critical. If we're looking at it from a banking sector, then you're looking at it in very different segments of the market. And Johanna is going to be able to talk to this far better, but it changes the way you look at what the priorities are. And there are dual priorities and then there are business priorities. So it's an inclusion and then commercial viewpoint.
Absolutely. And I suppose let's bring Johan into this conversation. Let's bring the banking into this. To shape this future of Africa that we wish to see, to shape these economies, we need to be creating these market-creating innovations. And in Africa, very recently, we've had the likes of Jumo, Yoko, even Paystack coming forth and having global players being a part of their ecosystem, whether it's through integration or through acquisition. Now, with a corporate and innovation leader like FNB, I'm curious as to how you're thinking about the future of financial services in the digital economy, bringing into task the previous question of when we are looking at financial inclusion, what it means to bank or to unbank South Africans or Africans that you're engaging with.
Cool. No, thanks. And again, I think all your questions are actually quite difficult to answer, and have got different angles to them. One thing I can say is we would also like to think of ourselves as a fintech, because I think what the fintechs get right, and you mentioned some of the names there, and why people, I think, put so much money behind them, is they focus on some of these, let's call them problems, or maybe friction points. I think when Aldo spoke, he spoke about, that fridge and how the thing will communicate with you. All of these things today are friction points. And unfortunately, your question on what do big corporates, what do we sit with, we might just have too many of these friction points that we're trying to solve. And as you spoke about people that we want to bring, financially include them versus you've got people super included, there's just problems and friction points everywhere you're trying to solve, and then you just miss maybe some of the obvious ones. So I guess that's where we see there's gaps that you can partner with them. Some of the stuff you can build yourself. We've just played a bit with our own agency network, talking to the financial inclusion point. We call it Cash Plus, and we've just said, how do we get customers, or how do we take banking to customers and then allow them to interact in their own environments? And for a lot of these customers, it's literally, again, speaking to the point of cash in and cash out. Just simple. That's a very basic, simple way. We were amazed at what we saw is how good the adoption is, how people like this. And that takes me to my next point. What I think people want. It talks to trust. It talks to availability. If these things work, you get people using it. As soon as there's a very cool capability or thing out there, but you have 2 or 3 times that it doesn't work, then I think this is where we get the friction, because now people say, look, cash is better. There's no friction in cash. I can just use cash. It'll always work. It'll always be accepted. And I guess this is where we need to think as all the players. I think as Dylan put it, look, different angles, different views. But ultimately, I think all of us are in this ecosystem, and we all play a facilitation role. There's not a lot or different way I can put it, because if one party doesn't exist, someone else will probably have to take it up. Otherwise, you move backwards and you end with cash. So let's say if cash is the starting point, all of us are trying to move better experiences, more data, more interoperability, but all of that is just moving away from cash. And whenever it fails, then obviously cash is king. So for me, I think there's an exciting space that is playing out. I think these fintechs are challenging everybody in a good way. And one of the things that we grapple with and we all think about is, Aldo mentioned regulation and standards. I think a lot of times where we get stuck is there's a lot of clever minds. There's a lot of innovation that want to happen. But when you're a bank, it has to go through a regulator. Okay, and that a lot of times just kills the idea, because now it takes you months to get people aligned on, is it possible? What risks are we opening up? When you behave like a startup and a fintech, there's no regulation. You just go out. You see a problem, like I mentioned, there's friction. You say, cool, how do I fix, point A to point B? And people put their heads to it, they build it, and then it looks nice. And then it's easy to maybe convince people. But I think we are stuck as bigger organizations sometimes that we first have to go through this angle of a regulator or some law or some interoperable standard that then before you know it, the whole thing is killed. So I think as we all think to the future, this is going to be broken, because if we don't do it, it's going to happen for us. It gives 2 opportunities. One is we do some of this ourselves, but others is where people have done well, you partner with them, because why reinvent the wheel if it becomes a commodity? And then what that will lead to in banking as well is, I think a lot of stuff will have less friction. And to my point, once it works, People will start trusting it. As Aldo said, what these bigger organizations do bring you, and I think we can't ignore it, is we spend a lot of money on making sure your data is secure, that when it looks like someone tries to attack us, we close down stuff and people don't even know half the things that are happening worldwide. But because we are bigger, we can do it, whereas smaller companies actually just don't have the funds to protect themselves. So hopefully it gives us a ticket to the game. We'll stay relevant, but we will have much more innovation and digital play that, as we spoke, get away from the cash component onto digital stuff. And I think as we say, the form factor will be something we don't know. Today, we still talk a lot to plastics and phones. I don't know, maybe you just wink or do something, then your fridge orders you coffee and the beans get installed. I think it's endless. But I think it's an exciting future and the time for all of us to apply our mind properly.
Well, Johan, I know that I would definitely just like my phone or my bank to read my mind and perform that transaction. Hopefully, we can get to that in the next few decades. But Aldo, I want to bring us back to a point that you made and that Johan just alluded to around reducing that friction. And one of the key players is regulation, and particularly for Africa. And having the agreement being signed on the 1st of January this year, the trade area agreement, when we're looking at the key strategic approaches that these regional players and the decision makers who are involved in signing the checks, who are involved in making the decisions on where the infrastructure needs to be set at, what are the kinds of contributions that you'd like to see, the kind of strategic engagements coming out of such acts? And especially between inter-countries and inter-relationships that are happening?
So that's again, true to form, an excellent question. And I think it's such a broad piece. I mean, I'm super excited about the Africa Continental Free Trade Agreement that was signed. But that is the first step. And there's a couple of things we have to do very well. And we have to think through very carefully as a continent. And if we do that right, it will be an absolute springboard. If we start tumbling over a couple of things, and regulation is going to be extremely important here, it's going to be a stop-start affair that might not be in a position of fruition 30 years from now. And I'm not being facetious. I'm just saying it's such a complex continent, 54 countries, sovereigns, that all have to agree to certain standards, certain ways of work. Now, if we get it right, a couple of interesting stats. So we estimate, and McKinsey also did a study on this, that probably in the next 4 years, about $300 million worth of e-commerce or internet-based, let's call it merchandising, will be consumed or purchased within the ambit of this continent. That sounds like a nice number, but if you looked at the earlier stats around the advent of cash, which is talking trillion, 1, 2, 3 trillion, we're still not even tipping the iceberg, so to speak. So that's the interesting stat. The second piece is if you talk to the sellers, the merchants, the insurers, the big wholesalers, the supply chain agents, they want to go digitally. 78% of them actually say that they believe if they don't go digital and they don't go some sort of internet or e-commerce based transactability, they'll become irrelevant in the next 5 to 10 years. Because firstly, they have to be relevant in their domestic market. But it's so important with this free trade agreement that they're relevant regionally. That they can't afford not to be on a let's call it a digital e-commerce type environment. Now, to get that right, the complexity is quite a bit because you're sitting with the East Africa payments region, you're sitting with SADC, you're sitting with the common monetary area within South Africa, Lesotho, Swaziland, and a bit still with Namibia, which have got certain restrictions or certain guidelines or certain rules. That on top of exchange controls, that on top of a certain trade agreements outside of the region that you've got to honor in a certain way, there's complexity. And we can only solve that properly through helping and working with the regulators to get these to a space where it's more open. Because that for me is one first expectation that we need to get right. I think the second one for me is to make sure that once that's clear, the multi-geographies follow that. Because it doesn't help that we've got this nice framework, but you know what, South Africa can play, but Botswana can't play, or Botswana can play, but you know what, Seychelles can't play, or Seychelles, Botswana, South Africa can play, but Cameroon can't play. It has to be at a certain level of standardization in each domestic market also. And that's going to take a bit of thinking, but also is going to take quite a bit of investment and a bit of willingness in those investments to make sure that it's open. I always make the analogy to say, you know what, you incubate very well in a closed loop environment. You can sort out your scenarios, your planning, your testing, but the moment you want to scale, you have to open it up. And what we call in payments interoperability, it has to become interoperable. Everybody has to be able to play, be it receiving or sending a payment. And I think that would be, let's call it a second bucket for me. And the last one would be just around how we open access to data in a clever way. So Dylan spoke about it, and he alluded to this element of trust, also the element of innovation, leading regulation. Those two together are extremely important concepts. If we get those right, I think the sharing of your data, the reading of your mind, Vuyo, would be a comfortable thing for you to do. Your fridge can tell you what to do because you trust it, because behind it you know that it's on a framework that works. But the moment you've got a data breach, everybody's got your data, your digital identity has been compromised, you're in a really, really tricky position, and then trust is gone. And that's probably for me the three building blocks we have to consider as we go through this huge opportunity in the right way.
Absolutely. Please.
I want to add to that because I completely agree. And I think for me, there's a statement that sums us up. Technology is not the issue here. For me, it's a leadership challenge.
Yep.
So this concept and the biggest challenge for the proliferation or the accelerate, what we're really talking about, because digital transformation, digital economy, it's happening, but we're talking about the accelerated transformation of this for creating a future Africa we want. So a better future. And we want to accelerate that so that we can uplift the entire economy, uplift the continent. We have challenges that exist not only at a sovereign local level, we have regional challenges, and we've got this continental challenge. And it comes down to the question of, are we going to win as much as possible together, or is my angle about I want to ensure that I'm winning more than others? And this becomes a major challenge when it comes to trade relations. And what is one of the founding principles of the Continental Free Trade Agreement is about saying, how do we all win together? However, there are political dynamics that are there. To give you an example, something that I've experienced, I'm very privileged to sit as part of a global advisory board called the Digital Trade Network, which is sponsored by the ICC. And we are private sector input, a couple of us representing Africa, to the WTO trade negotiations. And I couldn't believe the extent to which that is happening at what we call the global north, has a trickle-down effect in terms of impact from a continental level. So we can look at continental transactions, so, cross-country in Africa, but we also have to consider the opportunity of growth and scale for transactions, sale to the rest of the globe, and then what that means then for inbound traffic in terms of transactions, product, etc. And so it's incredibly complex. However, what we are calling for, and this is what's coming here, and I think this is what's so wonderful to have, as Johan, you said, companies like the banks have the resources and the impetus, and such as Visa, to really make a difference in promoting a public-private sector partnership and discourse that needs to take into account multilateral, multi-country engagement to say, how do we all win together and remove the challenges of politics in trade relations, which is about, I want to ensure that I'm always winning more than my counterpart. So technology is not the issue. This is a leadership challenge, and the opportunity is for us as private sector to then collaborate with our local and regional and continental governments.
Absolutely. Technology is not the issue, is not the problem. And I think what we've done is really create this lay of the land, offering the perspective from not only from a leadership perspective, but also the institutions who are responsible for facilitating these transactions that are happening. But I want to bring it down south a bit and for looking at the consumer, right? And Johan, with a company and a big company like F&B, I'd like to think that customer centricity is at the center of the kinds of innovations that are being brought out of the company. And when we look at customer centricity, how much of a component is customers being the compass in driving and developing these kinds of banking experience, and also the advisory network that you take for younger players to exponentially invest in?
Thanks, yeah. It's a journey we've been on as F&B, and I think there's others in the world that done it, is to be too customer centric. We want to get ourselves into a platform business. Because I think what's happened in the past is you had these little pockets. You've got people saw different accounts as different customers. Okay, so it's the same person, but then you've got 5 touch points or 6 or how many different accounts you've got. And that's when you start getting that experience that you think I'm dealing with a different organization. Now, as an example, one of the better businesses to compare to or to just think about is someone like Amazon. It's interesting that when you deal with them, it's always the same. I think they already can probably read our minds. So there's lots of, because that data crunch that you get from the experience is so powerful that they start predicting and the models get better and better. So that's where we're positioning ourselves, that we're moving a lot of our, let's say, older ways of thinking to becoming a platform business. So that when customers experience us, it's consistent. And then we also, as Aldo spoke, we have more data, because I guess that's your problem. If you're not that customer centric, you've got a lot of data, but it's not linked. And then you cannot use it to, as I spoke earlier, to get rid of some of the friction, to make the experience easy, to sometimes to the best of the customer, because I think that's the other thing we have to keep in mind here. We can, just for profit reasons, we can do lots of stuff. And the same applies to retailers and to anybody. To just make more money is a use of data, which I don't think is the long-term right thing. And I believe customers will call us out. If you do that, they will call you out and that trust element will be gone. But to truly help customers, this, like the example Aldo used, some of us like coffee more, so I'll use coffee. If I get told, look, your beans are low, please buy more, and I really get home and I see, okay, but the beans were low, so this is really helping me, I think then people will really start buying into this, and your experience will become so much better. But I only, from my belief is you have to be a true platform business to enable this. Because otherwise, I'm not sure what if I can call it, your architecture, your plumbing is going to be to enable it. If you're not a platform, and then you don't have the ability to scale, and you don't have the ability to put fintechs in and use partners on this journey. So I think that to me is where the future will go. Some will be faster, some will be slower, but I guess that is the new buzzword, and we'll probably get there and see that most of your interactions will become much more consistent and much more platform based, which again for the whole continent, as Dylan spoke, I think there's lots of opportunity. Look, there's lots of things we have to get right. Just talk connectivity, it's getting better and better. Some of my own, lived in countries where connectivity was bad, but it's all getting better. That was 5 years ago. Where you go today, it's much better. And as all of that gets better, these experiences can be enabled. And I think that's kind of where the future will lie.
Absolutely. I think it's really all about using data intelligently. Now, Dylan, I want to come back to you and highlight some of the statistics that Aldo had shared briefly to talk to the economic growth that we're trying to drive, right? And essentially what the success really looks like for this digital economy and this digital future Africa. And looking at from a regional lens of 45,000 jobs being added per year, per city, that potential, and also looking at the trillions of dollars over the next 15 years that could be added. What are some practical examples of economies who are already leapfrogging and spearing ahead to drive and provide this case study that really providing a better infrastructure really does improve not only the banking experience of the customer, but also for economic potential?
Well, I think that, look, you've got economies or countries that are still on journeys, and you've got some kind of micro examples. I think we're all aware of the Estonia example, which is really about the digital government and its entire digital platform, which I think is fantastic and is a case study globally. I know that there has been a delegation from Estonia that has come down to South Africa that our government has met with to engage with. I used to sit on a small advisory panel as part of the ICT sector in government, and there is so much opportunity there. But I remember sitting in Luxembourg with the chief architect of the Estonia digital government program, and it was, incredible to look at what they're doing, and asked him, well, we would love to do this in Africa. There's so much opportunity. What do you see as being kind of why you succeeded and what the biggest challenge is? And two things stood out for me. He said, look, Dylan, number one, we have a very flat structure in our government. So to create interoperability across all the government departments to ensure that there's security and integration of data and the systems are all talking together because they're not multiple different systems, data sets across the government, we were able to implement that. It also meant decision making was facilitated. The biggest challenge we're seeing with other governments around the world is this multi-layered bureaucratic environment that creates a challenge. Okay, that is how it is. So we can't try and replicate another environment. We have to say, well, what is going to be fit for purpose? So that is an opportunity to learn from that. On a micro example, though, there's a company that I met in Kenya who, for me, a great example of this cash to digital concept that Aldo was talking about, as well as what I call financial inclusion. They were a small company that were looking to sell local product that you're having vendors on the side of the street internationally. So it was an individual who saw that they had a product that was brass and bone that people were selling on the side of the road that they didn't have access to a market. They created a mobile ERP system for these vendors that they could essentially come onto, have a pipeline of sales and deliver directly to this company who would take those products that are made locally, package them well, and sell them to 15 international markets at $1 premium. From that, they started investing into these, they weren't even companies, they were individuals, started companies, created workshops for them so they can start scaling. Now, that is an example for me of the most micro opportunity in terms of how digital transformation is and the digital economy is accelerating in continent at multiple levels, using technology at the high end and bringing in financial inclusion.
Absolutely. I think to look at these examples and observe what's happening currently, I wonder, as we practice innovation in action over the next few seconds, when we're looking at the next 20 to 30 years, and you are opening a bank account, and what are the components, or take me rather through the journey of, in the next 20 to 30 years, as you walk into a bank, how are you going to be opening that bank account? And then what is that one limitation that you think will impede you to essentially open up that bank account and be able to transact? Be as open as you possibly can. Think limitless possibilities. Aldo, I'm going to go to you on how you would open a bank account in the next 20 to 30 years, and what would potentially limit you to opening it.
Okay, so I'm going to be provocative and say I wouldn't need to open a bank account. The day I'm born, I will be invited to a bank account. And the limitation for me would be to be born. So if I'm not born, there's no bank account. The day I'm born, My identity, national identity, and my ability to bank is linked immediately. And as I progress through my learning experience as a toddler to a teenager, every interaction I have at that stage, there won't be mobile phones anymore. It will probably be intuitive interaction with artificial intelligence around me in the environment I live. There will be data points there that they will mine and suggest, based on my preferences, how I interact with my bank when I need lending, because I wouldn't understand lending. I will basically just know I have a need, and there will be provision for that need through the banking environment that would have evolved at that stage. And my bank account will just be a de facto standard of me as a being. That's how I see it. It's a bit provocative.
It's provocative, but it definitely keeps the people thinking and going. Johan, as we move to you, the next 20 to 30 years, you're walking into, or perhaps you're not, into a banking institution or financial institution. Perhaps it is FNB. You're opening up a bank account. What do you need to open this bank account? And what is the one limitation that would impede this transaction?
Look, I would have loved, Aldo, that we can get as smooth as your example, because I also think it's going to be something that everybody will hopefully have. So it might just come with your ID. I think, look, it depends. 20 to 30 years is actually not that long. Things happen fast. My gut feel says, look, probably a lot of the stuff will be even more biometrically based. So that talks to Aldo's point. Maybe you're born with one. And then the factor of what you use to transact becomes something much easier. But then again, we know Africa, and as Dylan spoke, there's a lot that needs to happen here. So let's assume there's some markets that are not as advanced. And there, I think even compared to today, it's going to be much easier. It will use your biometrics. You'll walk in, you'll get issued. Some will still need plastics, others will have phones. But I think where today there's still a lot of paperwork and a lot of requirements on documents, I think hopefully that stuff will be out the way. So to use an example, and I think South Africa is quite far ahead and some of the countries are joining, but you can use your Department of Home Affairs today here to verify stuff. So that's already a massive step, but it's not available everywhere. Some still want, tax numbers and they want them verified. All of that stuff I think will be gone. And then I think what's gonna be one thing that I think is an unfortunate thing that's gonna limit us. I think a lot of the back to data, so some of the screening and terrorist screening and this stuff, unfortunately, I think they are also benefiting from this digital economy and this digital nature of where we're going. And we would have to become super sharp at stopping that stuff. So if you ask me what's going to keep us back, 99% of people straight through, walk in, born with a bank account. But there's going to be that 1% that we're going to really have to apply our minds, because that might stop it being 99% and maybe it makes it 70% or 50%. Because unfortunately we've seen it and it's real. This is not just enabling for all of us who sit in this meeting and conference. It's also enabling the people that we're very worried about and that are using it for the wrong reasons, as I spoke earlier. Hope it helps, but I would love Aldo's example just to put it out there.
Well, Aldo's example is definitely a step ahead of my technologies and bank reading my mind. And as we cross over to you, Dylan, your future digital economy in the next 20 to 30 years, how does that look like in your transaction of opening a bank account, perhaps for your great-grandchildren, and what would limit them from opening up this account?
Yeah, so I think there's, building on what Johan and Aldo said, I think we're not going to have a bank account. You will open up a digital identity. And that digital identity then has access to different mechanisms, whether it's a lender, insurer, retail facility. But more importantly, those merchants or transactors are going to be competing to pay you to access and have you as a customer. So not at the moment, we pay as a customer to have a service provision. it's going to flip around. You're going to want to pay me and give me the best deals to have access to my data, and therefore I actually become the owner of my data, and therefore I am able to commercialize my own data in that process. And I think that is going to be, for me, an interesting trend to look at how it evolves over the next 30 years.
Absolutely. I think quite interesting perspectives coming through. And as we wrap up this panel discussion and inviting your closing remarks, looking ahead and forging ahead to this digital economy and the infrastructure and many other added capabilities that are needed to advance and unlock this economic potential. To wrap this up, Dylan, I'm going to go back to you and really also giving perhaps one call to action to either investors, to regulators, to even consumers on how to enhance or how they can become participants and active participants in this digital economy.
I'll talk from the high level. We need the big players and the investors to give attention to a multilateral involvement and discourse in an ecosystem, so we can create standardization and projects that are inclusive of all the players. At the moment, we're running in separate silos, so it would be lenders, merchants, governments, retailers. We need to invest in bringing that together at a high level, and I'm sure the others will have more tactical examples.
Absolutely. The call to collaborating, we definitely go farther when we work together. Johan, your closing remarks?
Thanks, Jess. I think Dylan mentioned it earlier. I think one of the big things we need on the continent is leadership. I'm very worried that if you start with political leaders, that's what I'm referring to. The short-term nature of a lot of their jobs, I think, is not seeing this picture of a 20, 30 year out where there's proper free trade, things move around, we've got the right data in place. So I would think if we can get that right, so that this vision is shared wider than just call it private sector or call it tech people, I think there's a huge upside. It can start with small things. If you think agriculture, this continent has got so much potential for food production. For me, that is something where, unfortunately, the land is not owned. A lot of times it's owned by government, and if leadership can play a part there, that's also part for me of a digital ecosystem that can be phenomenal. It's job creation, it's food security. There's lots of the spin-offs that you get from it. So I think if we get leadership right, and then I kind of like Dylan's thing of we have to collaborate. Sometimes it's more difficult. Look, we all have to do our own thing. It's not as easy as it's said. But I do feel, just if I take it back to banking, if as banks we are cleverer at partnering with fintechs or playing fintechs ourselves, I think there's upside for consumers and businesses that at least will get that part going. Then even if I don't get business leaders and government leaders to kind of do what I think is the right thing, we can still get growing. It's maybe not exponential, but it will work. So I think that is going to be critical for us, how we all partner and make sure we're not all fighting over the smallest breadcrumb, because that's unfortunately what I think today is happening. Everybody is after the same thing. And again, some of these things, if it becomes a commodity, we should rather pick one person or one company, and then you just make it available to everyone. But the future will tell. Maybe in 20 years we can have this conversation again.
And hopefully it's telepathically, right? Well, certainly collaboration to increase performance, as well as competitiveness and giving each other that edge, and also looking to leadership to how we can drive Africa. And of course, this digital economic Africa that we are working towards. Aldo, I'll hand it over to you to wrap it up with your closing remarks on how we can effectively drive this economic growth and potential that we are talking to when it comes to banking.
Thank you very much. And I think Dylan and Johan did an excellent job on creating the clarity around those two key pillars, I guess, around collaboration and then leadership. And I think if we get those two right, I think the framework of how we create these marketplaces, these networks as we call it at Visa, is the key element of standardization. If we can all agree on how we communicate with each other in a digital way, in a standardized way, it opens up the channel to deliver the growth in a digital way through collaboration and through this political willingness from a leadership perspective. I think if you get those three, let's call it as a good ecosystem component or ingredients, we're in for an excellent growth opportunity and journey. And all the things that Johan have mentioned in terms of the opportunity on the continent is there. It's at the grasp of our hands. It's there for our future generations and our children to come. So it's incumbent on us as leaders to start creating that environment. Make sure that we collaborate and we put differences aside and we say, what is this future journey that we believe is for the greater good of the continent and the globe where we fit into. So thank you very much. And it was awesome being with you on the channel.
It was definitely awesome having this conversation, and a beautiful way to wrap it up with this key three strategic points of standardization, leadership, and collaboration. Indeed, a robust conversation on a call to action to this digital economy of banking through the capacity of the right infrastructure, the right leadership, and of course the impact that it has to change the way that we bank, and not only efficiently through value-added capabilities, but the urgent call and the market in the gap of leaving no one behind, the gap opportunity of leaving no African behind.